David, thank you so much for being with us. Do you think the optimism here, just the optimism that investors are displaying, is it justified?
I think so. I mean, I think the thing that everyone has been worried about all year is that inflation was getting out of hand. And what we've seen this week, we've had three reports on consumer prices, on producer prices, and now on import prices, and all of them show that the sort of this inflation cold front is moving through. The inflation rate is clearly now coming down. We've seen gasoline prices fall by more than $1. And if inflation does come down, that means the Federal Reserve doesn't have to raise interest rates as much. And that is a good environment for stocks. So I'm not surprised to see the stock market rallying off this news.
So with inflation coming down, what do you think that means? Because at the same time, inflation is coming down, but we did get that stellar jobs report, just in the previous jobs report, showing 500,000 jobs added. What do those combination of factors mean for the next sort of Fed rate hike scheduled for the end of September?
Well, I think the Federal Reserve needs to realize, and I think they do realize, that this is a very unusual economy because of the pandemic. What happened is we came out of the pandemic with all these job openings. We had 2 job openings for every unemployed worker, which has never happened in the United States in the last 50 years. And with all those job openings, it's taking a while to fill those positions. And that's why I think we've got this very strong job growth. But I think the Federal Reserve also knows that the economy is slowing down. In fact, we had negative GDP growth in the first half of the year, and I don't think growth will be much faster in the second half of the year. So this is a slowing economy. The jobs market is just a little bit misleading here. And if the economy is slowing down, if gasoline prices are rolling over, the Federal Reserve does need to take it easier. And I think they will. I think, I don't think we'll get 75 basis points in September. I think they'll raise interest rates by 0.5% instead of 0.75%. So I think they will take it a little easier going forward.
Yeah, you've had 2 consecutive quarters of sort of negative GDP, but weirdly at the same time, as I mentioned, this supercharged jobs report. What do you, when you talk about inflation, you talk about the economy slowing down, what do you think in terms of the likelihood of a recession happening anytime soon? And if you do think a recession is around the corner, will it be a shallow one, as some people are indicating?
Yes, it's kind of like getting asymptomatic COVID. We might have an asymptomatic recession in which technically, yeah, we've got a recession, but it doesn't feel like a recession. A recession where the unemployment rate is 3.6% is really doesn't feel like a recession. So I think it's quite possible. I'd say there's about a 1/3 chance that we technically fall into recession in the next year, but it should be pretty shallow. And hopefully the economy can get back to slow growth thereafter. My guess is that a year or 2 from now, this economy is actually going to look quite like it did in the middle of the last decade, 2016, 2017, slow growth, low inflation, low interest rates, and a pretty good environment for investors.
So for businesses, I mean, how do you plan in that kind of environment? On the one hand, I loved your analogy about asymptomatic COVID, because it's sort of like not just asymptomatic COVID, but it's like having COVID when you feel the best you've ever felt in your life. Just explain to us how businesses plan in that kind of environment where there are some indicators of perhaps some kind of technical recession on the horizon, but again, a labor market that is really tight and really strong.
Well, I think businesses have to, this is a time when you see good business people figuring out what to do here, because you've got to keep an eye on margins here. You want to make sure you staff up to be able to compete, but don't treat pent-up demand for your products or your services as a sign of what revenues are going to be going forward. So you're going to have to control your costs and just build a business plan that will work in a slow-growing economy, because we had the pandemic, we had the bounce out of the pandemic. Neither of those represent the economy going forward. So you've got to have a plan that works in a slow-growing economy for the long run.
David Kelly, live for us there. Thank you so much.